under trading newsletters.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, this is the Tiger Technicians Hour. My pleasure to be here. This is 8 a.m. Friday the 14th, and it'll be replayed at noon. So let's go to the news, and that is still with some conflagration, some talks going on. Oil was an issue, and then it kind of faded yesterday. Gold is up sharply. Let's go right to the charts. We've got the Dow closing yesterday at 26,106, bumping up. Remember, I spoke about this on the left side chart. You've got the Chapman wave inside track repellent zone. It's got to push into the 26,300s to really break above that. And we've taken some off. We got long on the day of the low on the 3rd of June. I said only for swing traders. Let's take a little bit off a few days ago at the high. And now what we're looking at is this consolidation is going to be very important. Let me explain what I'm looking at, because if you look at the YM, this is the futures right now, they are down 40 points. And let's go back to the closing price of yesterday. What we are looking at here is that the MACD, the moving average convergence divergence, is very strong, and the slow stochastic is at 88%. That is good action. Now, talking about good action, we've got support today at 26,020 to 25,950s, even all the way to 25,850s on a shorter term basis. We're looking also at the S&P. The S&P futures are down 7, and the E-mini at 28.91. The S&P closed at 28.91, also bumping. I haven't quite finished drawing this in. Let me just do it. It'll be green if it breaks above, and it's red on this particular pattern right here. There it is. So we're bumping up against that resistance level, and until the S&P can really break and close in the 29.16 or higher area, at this point we're considering it a consolidation. Stochastic 87%, over 80% I like. In the 90s is really strong, so it's very close to 90, and the MACD is expanding. So far, this is good action. I'll talk about the weekly and monthly charts in a moment, but just let me finish with the indices. The Qs, I haven't drawn this in either. I'll do it right now. A little sluggish on those because there were so many things we've been looking at for my subscribers to my opening call. Remember, I did a webinar just on Wednesday night. Everything there is very pertinent. And I've added some things to this morning to subscribers for what we're looking at in the longer term. In the meantime, back at the ranch, the QQQs have had a very good rally, but this rally really isn't quite as strong as the other two, the Dow and the S&P. And today it's being impacted, I think, by the semiconductors, because yesterday, what was it, AVGO, this is Broadcom, got smacked, I mean, down huge because of outlook was very poor. So the Qs are down one at 182.42, still got very good support at the low of 2 days ago, 182 round number low. I'd even say 181.70s. I would like to see a push below that. I think this is a consolidation after such a big move. We'll see how that works out. IWM. Actually, the IWM held very nicely yesterday. I was even tempted to consider a long position here, but I'm stepping aside for the day. I want to see how the day pans out. It's really important not to get too carried away, either up or down. And the IWM Russell 2000, 152.80 right now, down 27 cents pre-market open. And that is really pretty good action. It hasn't gone to a leg C yet. 153.23 was the low of the 11th, the high of the 11th, and 153.18 is the that was a high yesterday. So it's got to go about 4 ticks higher to start breaking into a leg C. Now this is going to be very important because gold is up $14. It's breaking out from resistance. It's going right up. Remember we spoke about the gold and the continuous contract, the high of the week of the 22nd of February, where it went to 1361.6. Now it's at 1358.2. And intra overnight, it went to 1362.2. And that, of course, breaks to a new high. I've called this, in the Chapman methodology, you've got the cup formation. I've called this an F/B. A lot of what I'm looking at says the speed with which it's gone up has not seen the technicals move up commensurately. They've moved up sharply, but they're still lagging in the sense that they're lagging to give me a sustained move indication. They've got a definite quick up move. So this is going to be very important. If a week from today, Friday a week, gold does not close any day below 1340, but in fact has gone towards the 1356, 1365, 1380 level, 1365, 1375 level, sorry. That's going to be very important. That's going to say that this is a bigger move than many of the others in a very quick period in the monthly, and it's gone to a leg C in the monthly. That, in fact, is actually quite positive. Silver, so gold is up 14. Silver at this particular point in the continuous contract is up 16 cents at 15.06. It hasn't taken out the left side high. You know, it's been a laggard for a while. When it finally catches up, that's usually when gold starts to pull back. So 15.15 was the high of the 7th of June. It needs to go above that for a leg C in the daily and extend this leg A in the weekly, unless that's next week. That'll be a leg B. So far, it's okay action in silver. Hey, this is very important. Look at this. The dollar. The dollar is actually up 6 ticks at 97.12. Not a great move, but a very nice move off the 200-period exponential moving average. One of the reasons why we remain long. We've only taken a little bit off over the period since we went long at about 90, the dollar over a year ago. I'm thinking that this trend line is going to be so important. Look at the weekly trend line. That is going to be something to monitor, because a close on a weekly basis below 96.20, let's call it 96, a close below 96 in the dollar would suggest not only that the dollar has more time and probably more price to go in this consolidation, because I still like the monthly, but it would suggest to me that gold, this is going to be a really important move. And if you look at the GDX is trading at 2368, up 44 right now. I've got this as a leg F in the daily chart, and you know that when we get to an F and a G, that's where you got to be careful. But the MACD, the moving average convergence divergence in the daily, is really strong. Stochastics at 86%. Not only that, the weekly is finally, it's Friday, we've got the whole day to go. But so far, pre-market, that MACD is crossing positive. That's going to be a big thing for the GDX. I'm watching it closely. Now let's go to crude oil. Crude oil itself is trading down 15 cents. It's really stuck in this low range, even with the two tankers having a problem yesterday. I mean, what was that about? 52.13, down 15. This is just stuck at the lows, not breaking down, but stuck at the lows. I want to look at the TLT, because the TLT rallying 49 cents right here is still stuck in this pattern that I spoke about, where the lowercase h could go to a lowercase m, but holding in this area is suggesting that just on the shorter term, we've got to think of the market having a bit of a cap on the upside. Doesn't mean to say it has to smash, but money evidently still going to bonds. I'll be right back. Basil Chapman. This is the 8:15 time period in the morning. It'll be replayed later, and the futures are down.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. Steve Dahl and Tom O'Brien have just announced a special webinar on June 19th for all subscribers to the TAS Profile Scanner. Steve and Tom will break down the trade matrix, market breadth, heat grid, as well as the three-step process you can use with the TAS Profile Scanner to identify market movers and how to capitalize on that move. For all the details and to get started with the TAS Profile Scanner today, visit the front page of TFNN.com. With a 30-day money-back guarantee, you have nothing to risk. Go sign up today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. So I just wanted to show you a couple of things. So the TLT, I think that money is still going into bonds at this particular point. Yet there is, remember I wrote here, low rates force TINA, T-I-N-A. There is no alternative. I heard that expression about 6 weeks ago. I thought, wow. I mean, this is what I've been speaking about for years and years and years, but somebody just put it into an acronym, TINA, which just sums it up in 4 letters. I think that's perfect. There is no alternative. I think that is key. And if you actually want to look at, ooh, can I do this right now? Let me just do this. Let me see if I can find it right on the top, right. Long-term mirror, that's it. That's what we're looking at. If I can show you this chart right here, this is now, let me get it. It's coming. All right, there it is. Okay, so these are bonds. You see, I drew this pink line in a long time ago, and I kept moving it up and down. And what I wanted to show you is, look, bonds have been in this range so many. Let me squeeze the chart. This is the yields. The white is the 30-year TYX yield. The brown is the 10-year TNX T-note yield, and the yellow, the cyan is the FVX 5-year T-note yield. Look down there. In a leg D to the downside, the 30 is in a leg E. This is really important because we've been here so many times. So it's really the 3-year going over the 10-year. Yes, I think I keep getting notes about that. I'm not dismissing that it's important. It is important, but it is also the fact that we've historically been for yields in this area. What is important is what is the relationship of the low yields to things like, let me just show you this chart here, if I can get it. So this I have to refresh. There it is. Of wood, which is the iShares Timber and Forestry ETF. This is the big global picture where it's made a Chapman wave arch formation, arch formation, lowercase h, tested the left side low, then bounced back up, didn't close below, I think it closed maybe once below 55.05. Let me just double check. 55 closed, 55.00. So this means that there could be a rally, but the rally might halt at a certain point on the left side, whereas if it didn't break the low and it held very well, it says, oh, you can go all the way to the previous high, which is at 66.26. So this is going to be very important together with Dr. Copper. Copper's been really lagging, just very poor. But look at the housing sector. You see, if there are jobs, and this is the big difference, there are jobs, and I believe from everything I'm reading that the job market, the choices of jobs, the fact that people are resigning from jobs to go to other jobs means that there's certain security. That part of it, I think, is very important. So I'm trying to put the picture together here. And what I do want to show you is that yields have been here before. It is the crossover that's kind of important, and we'll talk about that in a moment. Now let's go to something that I really wanted to talk about. In my work, and this is what I spent a little time on in my webinar the other night, I mentioned that holding flat in the stochastic for, even when I look at Dave White's fabulous oscillator, the charts that he shows based on his work on the 9 oscillator, I'm looking at it and I'm saying, yeah, that's the same information I'm getting, that the stochastic has run up. It is kind of at a high, but if it flattens out, if it doesn't make this inverted turn, if it doesn't make this U-turn at the top, this arch formation to come back down immediately, but instead holds in the high 80s, preferably the 90s, that says you can sustain a move a lot longer. That to me is the most important thing. So all these, it's interpretation, but for me, it's sustainability of that particular rally. Look, the on-balance volume, I mentioned the reason why we took profits because the 120-minute chart, it made a peak D, there was a chance of an E, and it did that pop right on that E is where I said swing traders, because swing traders go for 3 to 5 sessions usually. And that kind of fitted our parameters exactly Monday to, I think it was the following Monday or Friday, Monday. And then it pops up right there on the 11th. Yeah, you're right. And it is 26,248 in the Dow. Opens at, let me just see, it opens at 26,180. So there you've got your consolidation. But look, it's a sideways consolidation. And this is interesting, even though it's very tiny. Let me make it bigger. Even though we've taken this number of bars in the 120-minute Dow chart to consolidate, it's held the black line, the 14-period exponential moving average, and even though stochastic pulled back sharply, it went from 97% down to, I think, 19%. Now it's at 38%. Well, the price held, and price is the arbiter of the trend. That's the most important thing. So I want you to make it just a little lesson here, because today's Technical Friday. Look at all these different indices. So unless there's a real bad news event that takes not just the price, because the price of the S&P at this point at 28.91, futures are trading at 28.91 as well. You want to see, and they are down 6. So there's this disparity between the futures and the price, the cash price. If the S&P starts to trade at 28.72 or lower, I think you will start to see the stochastic go down to the 83% area. If it goes even lower than that, or it takes 2 days to get there, then you might see this, the stochastic go under 80%. And that's the way I like to use this particular series of, look how it held above 80%. Look how nicely the market was moving up back there, going to the high of the 1st of May. So, all right, with all that said, I want you to do a couple of other things. I want you to look at the XLF, because the XLF has held okay. It's done very nicely. It's held okay. But this is what I call a silent move. I want to see very quietly, nobody talking about the XLF, the S&P financials. I think it's important. I think if the S&P Select Financial Spider Fund trading at 27.40 right now, up 22 pre-market, it closed yesterday at 27.18. If it can manage by Tuesday, Wednesday of next week, even just to nick 27.45 on the upside, rather than to slide below 27, let's call it 27, or to even close on any day below 27, that'll say to me that this whole smorgasbord of what we're looking at in the different indices, it's going to be really, really important in looking at what's working and holding and what's failing. Now let's go to the SMHs. So AVGO, which is Broadcom, came out with really bad news. It dropped. Let me see where it is. AVGO pre-market. It is trading down 26. It was actually much worse before. We made a peak in the Chapman wave way back on the 1st of May at 323.20. Plummets down to 250. Did it hit a round number? Yeah, 250.09. And then it rallies peak A, peak B, and today, and then it hits 290. What is it? On the 11th, it goes to 291.75, kaplop. But Advanced Micro Devices has done very nicely. It's down 74 cents. It's got that peak D that we always look for in the Chapman wave methodology, and it's made a cup formation testing the 34.14 high of September. Yeah, September, the all-time high, and it dropped sharply to 16. Well, it's doubled. It's gone up to the 34s again, and now it's trading at 30. I'll talk about the settings when we get back. Basil Chapman, Tiger Ignitions Hour. It is 8:30. Reports coming up in a moment, 8:26. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. This is Basil Chapman with the Tiger Technicians Hour. Remember, I'm the host of the Tiger Technicians Hour at noon. This is the early show being recorded. It'll be on, of course, at noon, replayed And so I'm giving you the pre-market news, the Michigan consumers' expectations for today. Thank you, Ruby. I haven't got the number, but that's coming out in a moment. Remain long. And I'm just thinking, at least today, sideways action. I'm not sure there'll be too much going on. Seem to be a lot of sellers and a lot of buyers. When it rallies, the sellers come in. When it drops, the buyers come in, the mixed market. So Advanced Micro Devices has made a retest of the highs in this kind of V-shaped pattern. Now, talking about V-shaped pattern, let me get to this real quickly, because I said I'd talk about Visa. We had a call yesterday from Jerry. So Visa, I'd say, is just looking absolutely fabulous. He was looking a little nervous. And what I'd say is, just on money management, maybe if you want to take a little bit off here, but it is acting extremely well. But it did go from yesterday's high of 172. This is spectacular. Look at this monthly chart. I mean, talk about using moving averages. Look at that. Look at the green lines, the 9-period moving average. The 14 is the monthly chart. This is the 14-period moving average, the black line. And it's way above. The MACD is good. Stochastics at 95%. I said to him, yeah, I would understand why you can get nervous, but I would rather, in fact, this is what I'm going to recommend, that yes, at 169.50, just 3 points or so off the all-time high of 172.20, I can understand taking a little bit off, but I would do it only as part of your money management, so you can be comfortable that you're doing things. You're not being greedy. You're not being over exuberant. You're not being too cautious. You're just being, the chart is telling you is acting very well right now. Can you imagine what they're making? Because with interest rates, the real interest rate's so low, and they're charging an arm and a leg. So yeah, I think that this is still a very good place to be. The U.S. May advanced retail sales plus 0.5% versus plus 0.6%. Fraction down. I don't think that's such a big deal. All right. So what I am going to say to Jerry is, what I would do is, just because you even asked the question, because you asked the question means you're a little nervous, take a little bit off. But this is not because of where it is. It's because of how you feel. I like what it is. I can still see it having a digestive phase going all the way down to 164 as a consolidation. 5 points. It could even have a little bit more, but right now it's acting extremely well. So yes, take a little bit off here, and let's look at it again, maybe in a week's time when I'm back, a Monday week when I'm back, or you can even email me. But at this point, I really think more just take a little bit off. Let's see how it handles the highs, because I don't see any reason why it should be pulling back other than it's extended. That's all. Next question I had was, so Ted sent me something about Merck. Fascinating. You know, Merck, I'd forgotten to look back. Now, this is going to be so interesting. You know, Microsoft and some of those major companies from the year 2000 that were made highs that were absolutely major highs, because that high became a high of note for all the tech sector, because they got smashed to the downside. I forgot that Merck is Merck and Company, which is one of the major world pharmaceuticals. I've got this as a high of 91.50, and I think that you had mentioned a different price, but I might be mistaken. I'm pretty sure that Merck had split at some point. So you remember the price. I think it was about 4 points higher. You're absolutely right about that price. I remember it being in the 90s, but here I've got it at 91.50 going back historically back in November of 2000. So November of 2000, the top came in January for the Dow and March for the S&P and the semiconductor index. Well, it had a little bit of a fall. It dropped down from the 91 area to 25 in October of 2005, had a fabulous peak D rally to December of 2007, 61, 62. Then it made a little bit of a low. It went down to 20.05, and now it's trading at 82.50, 83.25 actually, pre-market, 82.32. Yeah, 82.32. And it's in leg C. So I do believe it's going higher. And I'm now using it for other indications, and I love that. Thank you for reminding to look back. I have a subscriber as well as someone in the den, a couple of people that are involved with Merck. They've had it for a long time, on and off, And the person who, the subscriber, had been looking at the peak D that was made way back in December of 2007, and had bought it somewhere, I think, in 2009, 2010, thinking that it would go all the way back in a left side, right side price time match to peak D. It went to an E, then pulled back, made another E. Look at this. It's had one buy mode, two buy modes, three buy modes to E, and now it's in its fourth, and the fourth is usually the one that it has a much bigger correction when that correction comes. But right now, the stochastic's flat at 90, and the MACD is very strong. Just wanted to go through that. I'd like to respond to people who have asked me about questions. And Amazon, AMZN, let me just go back here. I want to show you something. Amazon pre-market's down 4, and there it is. It's bumped into the Chapman wave inside track downtrend repellent zone. So until it starts to go into the 1895, 1903 area to break away, which will help the weekly chart as well. Just think of this as a little bit of a digestive phase at this particular point. Now, let me do this. I didn't have a chance. I wanted to do the Euro, EUR, USD, the euro-dollar currency pair, dropping sharply. And this is saying to me that the move in gold is not an aberration. It is what I've been talking about for so long. I think you've got to look at all these different sectors as purely individual. I said that the euro just looks terrible. It could rally. It's gone above the this major down channel, but the weekly chart still was not doing very much, and it needed to get to the 1.14 or 1.15 area and hold there for at least 1 or 2 weeks to say it's breaking out. So far, it's breaking down. That's not good. If you look at the USD JPY, the USD JPY is the yen, USD dollar yen, dollar Japanese yen currency pair. Yep, it's at the low range. It's just kind of stuck. Let's see what the dollar's doing now after that news. The dollar is up 0.05. It's not a big deal, but it's a big deal for me because it held the 200-period moving average of 96.48. It's rallying nicely away from that. It's bumping into 97.19, 14-period exponential moving average resistance. And the weekly chart, thank goodness, although the technicals are weak, the price has held us up this serious. Let me make this red so you know how I work. This is my red line. This is the Chapman wave inside track buy zone, and it's above that. And it says at any point, if it breaks under that and closes under that decisively, certainly in the low 96s, but I'm saying in the 95s, that says, uh-oh, oiskadois. That's it for the dollar, at least in the more intermediate term, and that's going to make a lot of pressure on the monthly chart. Hey, look at W. Look at wheat, dust wheat. It's up 2 at 537.5. Look at this leg D. What a beautiful move. I spoke about this all week. We are long the agricultural fund, been long for a while. It's done fabulously. Look at wheat. Look at soybeans. Soybeans, is making a leg D as we speak. And look at corn. Corn is way extended in leg C. The weekly's in leg B. What a beautiful move in the agri area. We'll be back. Basil Chapman, Tiger Dennyson's Hour.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So we're looking here at sugar, and sugar, this is a continuous contract, and it's just testing in leg D in the Chapman wave methodology. Oh, I should have discussed that. In the Chapman wave methodology, we look for the lowest low bar and count the higher peaks, and that's the fourth peak that's alphabetized, uppercase on the way up. It's called peak A, peak B, peak C is the third, peak D is the fourth. It's in leg D right now. It only makes a peak when there's a lower high bar, and a lower high, I should say, of the bar. And the MACD is very strong. Stochastics flat at 98%, very strong. So it's testing, and that means that at 1276, you can see over the next couple of days, you could start to see a little bit of a stall, and maybe it'll trade between 1260 and maybe 1284 as it just breaks the 200-period moving average. Look how that was. I use these moving averages only as I don't need them when I don't need them. They're just there because when they come into focus, bam, you want to use them. Look how it was repellent, the orange line, 200-period exponential moving average, orange line repellent zone, and it plummets down from the 13s down to the 1140s, and now it's at 1276. It's getting back. I should do a left side, right side price time match. It's saying maybe by Monday or Tuesday, if there is still strength going on, the 1294 to the 1303 area is going to be a target next week, but that it really needs to hold 1260 to be able to do that. Coffee, let me just look at coffee. These are not what I have for traders. It makes a peak A, B, C. That was a C and a bit of a failure there. All right, well, coffee at 99.80 is struggling. It got repelled at the 200-period moving average and saw the MACD. Look at that big turn to the downside. All right, I want to go through a couple of other things. I was asked about MA, which is MasterCard. Look at that big move. That's called a rogue wave in my parlance. It was coming down, the stochastic MACD were all bad, and then suddenly that has this big spike to the upside, leg E in the weekly. Now, here, if you were asking me about MasterCard, what to do, I would say just based on the action itself, here I would want to take off some, only because I'm going to have to call this a rogue wave peak G for the moment, and there I would automatically say yes. Now, not just as money management because it's done so well, here I'm saying there could be some kind of a big consolidation, a choppy move, which trading at 261.89 pre-market. It could be a big range between just a little higher into a new all-time high, maybe 272 and 250, and that choppiness could say, you know what, this is a little different chart because it looked like it had concluded its big move and was busy consolidating right there at that peak F on the 22nd of May at 258.86. It does pull back. It goes under the 50 period. People asked me about my moving averages during the my webinar the other night. Yeah, I keep the 50 there, this little dash gray one, light gray. Just keep it faint in the background. I don't really use it very much. Actually, I was asked about the 32. And what I'd said is that someone had mentioned about 2 years ago the 32 period moving average really works for them. And I just say, whatever works. I'm not telling you what you have to do. I'm just saying what works for me. So I said I'll experiment with it. I found it's pretty much like the 50. It is important. I love the ones that I use. I'm just so comfortable with the ones I use. I love them. And look at the way you can see in this particular chart. Look at that, the way it's held beautifully in the 9 EMA on the weekly chart and touched the 14 period moving average once since it broke above. That was in January, the week of the 18th, when it was trading in the 190s, and it spirals. And just last week, it went and hit at 240 on the low. It went and hit the 14 period moving average, and then it went to 2666.87 on the close, and now it's gone to a higher high with a red candle. So I'm just saying this one's a little different to Visa. They're kind of in the same category. They don't do exactly the same things. The other one, another question I had, would I look at the EEM? I'm sure I'd love to look at the EEM. EEM has had a very nice move. It's in a leg. I believe it's a C. Let me just go. So it goes to a trough G with a beautiful doji candle. That was around about the 22nd or 3rd of last month. And then it goes peak A, peak B, peak C. Yeah, it's holding pretty well. And considering this is the iShares Emerging Market ETF, doesn't look great, but it's holding a lot better than I would have thought just based on everything you hear from the emerging markets. So yeah, this is going to struggle at 41.32 down 24 cents. It better hold 41. If it holds 41 and is able even to get to 41.85 by Monday or Tuesday, then it's going to probably test 42.35, the 200 period exponential moving average. Next question I had was, where are we going here? IBB. IBB, which is the biotechs. I mentioned the other day, I said, this is one just to keep your eye on. I think it's kind of out of favor. Kendall Square here in Cambridge, Massachusetts. Everything you look at is a biotech, something they've got a link with MIT, Massachusetts Institute of Technology. They're right in the heart of that. What they must be paying in rent and the buildings. And can you imagine hiring someone in this sector so in demand? I think that's going to be slowing down. So it's not one of my favorite sectors, but I certainly think that it's getting ready for some kind of a bounce. We'll be following this one for my newsletter, the opening call. Meantime, back at the ranch, I was asked also about, I'm going to forget, CTS I'd mentioned yesterday, which is Cintas. You see, this is an all-time high at 235.96. This is one of my icons that I look at all for decades because it's in the overalls, uniform, and rentals. And this is saying to me, this is for real, that yes, it is a latecomer because it doesn't top out until after the market tops out because people are still thinking things are good and they're renting the overalls and uniforms, etc., or buying. But Cintas, CTAS, I think this is saying to me, you're okay in your positions on the long side. We have no shorts to this side. I was going to go back into the SMH shorts, depending on what happened yesterday. But once the news came out overnight that it was going to plunge because of the AVGO, I said, let's just step aside. I think semis in a consolidation phase right now. But what we are looking at is other sectors are doing quite well. I mean, if you look at so Cintas, I'm saying, for me, it's a barometer. And it could be late to the party, but at this particular point, it's saying things are good. But if you look at something like, I wanted to look at, we can go to Google Alphabet. It's not one of my favorites. This is a fantastic company, but I think the chart, the U formation in the monthly chart with an all-time high in July of 2018 at 1273.89. Drops very sharply under 1,000 and then goes back to just a modest recovery high, all-time high of 1289, I think that this has got a bigger consolidation coming. And that says to me, and the reason why when I was asked the question, if this is a V-shaped pattern, shouldn't we be buying every single dip? And the answer is, I think you can buy dips, but you've got to be selective. You can't, if it's an area that's had a spectacular move and needs a big digestive phase like Alphabet, I think you just have to be a little careful. If you're looking out for your IRA or your grandchildren or your kids' college fund or something, this is a stock that should do very well looking at. It should go up probably into the 2,000 area. But you might have to wait. You might have to just have a little bit of patience. So I'm saying right now is the period for patience in some of the areas. And some of the areas seem to be doing very nicely. I'll be back in a moment. Basil Chapman, Tiger Editions Hour. This is the early edition, pre-market, 10 minutes to 9. 40 minutes before the market actually opens. And the futures are down, down 6 in the E-minis and down only 33 in the Dow. Dow's actually...
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. Don't forget, great program for the rest of the day. I just want to mention that my webinar on the tide, looking at the tide, look, here's Costco. Is this a tide or not? It goes down under 235, has a single leg A to the upside, and then makes a leg B. It's up 29 cents right now, pre-market at 260. This is a beautiful looking chart. Look, here's the left side, right side price time match, and it stopped dead on that right side shoulder. Now it's in leg E in the weekly chart. This is the tide. So my webinar's there. You get 30 days for my service. It's a money back guarantee. check it out, and you'll get not just my webinar on the tide on Wednesday, which I'm pretty proud of. I think we covered a lot of stuff, technical stuff that you can use all the time. You get my newsletter. You get my newsletter, detailed report every single day. Look at this. Here's my daily for today. This is the daily chart. I do the 120-minute chart. I do the e-mini, and I explain exactly what we're looking at, why we're looking at it, what's important in the Chapman Wave methodology, all in this very brief paragraph right here. I do it on that, a 120-minute chart, plus my opening call, which has my Traders Corner, which has an opening paragraph, which kind of sums up everything in just one paragraph, what we're looking at, why, where the market is, etc., and then the bullet points, 16, 17 bullet points of what we have, what we don't have, what we're looking to buy, etc. So check it out. And I will not be here next week. I know that I'm going to be away, and I'm just going to be dying to do at least one day live on my show. I will be doing my newsletter every single day. I'm going to try my best at some time, if I can, midweek, to do a live show. So have a great week. You've got Larry Pesavento coming up at 9. Should be a wonderful show as always, and then program all day. And just check out my opening call. It's my daily service, and I think that you'll find it hopefully beneficial and something that is important. Remember, keep your eye on over the weekend. The dollar is acting okay, but it's not great. And gold is just broken out, so gold is still in play, but it's right in resistance at the 1360 area. So how it closes and what happens Monday and Tuesday is going to be very important. Have a wonderful weekend, and I'll see you sometime soon. And stay tuned for Larry.